discuss this thing with you. You know, there are 2-3 issues which we have to discuss. You know, in new IFRS 16, all of you please look at me. In new IFRS 16, majority leases are now finance lease. Majority in lessee books, majority leases are finance lease, right? Like in 1 or 2 areas, you are allowed to use operating lease exemption. Like if the lease is less than 1 year or it's a low value asset, otherwise the lease is finance lease. So you make the entry ROU debit and lease obligation credit. ROU debit and lease obligation credit. Okay, students. Now, my dear student, please concentrate here. Don't write too much in the chat box. It will waste your time. Please concentrate here. So according to IFRS 16, my dear students, we make this entry ROU debit and lease obligation credit. Now, on this debit side, ROU, you can apply IS 16. Yes, and you can sometime you apply IS 40, investment property. On this debit side, you can apply IS 16 and sometime you apply IS 40. Let me explain you how. For example, you have taken a machine on lease. And you are going to use that machine. Use, U-S-E. You are going to use that machine. So whatever asset you use, you apply IS 16. Whatever asset you use in your non-current asset, you apply IS 16. Okay. So if you are using it, you apply IS 16. Look at here, smart students. But now, today, you bought a property on lease. You bought a property on lease. And you started giving them on rent. Now you are earning rental income from that property. So when you are earning rental income from that property, so now you have to apply IS 40 on it. You know that whenever you earn rental income from any property, you apply IS 40. So both of these things are possible. And in IS 40, there are 2 models. One is cost model. Strictly, we are discussing the asset side. Here, right? Cost model, and the second is fair value model. Okay. One is cost model and the other is fair value model. Okay. And same is the case with IS 16. IS 16, again, we have cost model and the other one is revaluation model. Okay. Cost model and revaluation model. I haven't discussed anything difficult. Don't think like that. Go simple, go relax. This is what, and I've given you the logic as well. Okay. Now let me read the article. Let me read the second paragraph of the article, or let's read from the first paragraph. IFRS 16 leases has brought significant change to the accounting treatment of leases. The most important of these changes being that the leases now have recognition. Lessees now have to recognize operating lease as a right of use asset. Yes, in past there were many leases were operating lease, but now majority leases are finance lease. As with other asset, this ROU asset may have to be tested for impairment. Yes, since the ROU asset is a non-financial asset, we all know ROU is not a financial asset. Yes, on financial asset there is a separate world of impairment. On financial asset, there is a separate world of impairment. On financial asset, there is a separate world of impairment. You know, stage 1, stage 2, ECL, expected credit loss model. That is where there we don't apply IS 36. On financial asset, we don't apply IS 36, but ROU is a non-financial asset, please. The requirement of IS 36 apply. However, there are 2 exemptions to the IS 36 impairment model. See, now we are discussing these two exemptions, and you already know these exemptions. You already know these exemptions in the lecture. If you have taken the lecture of IS 36, look at here. Firstly, Don't sleep now. Look at the screen very carefully. Firstly, when a lessee applies the fair value model in accordance with IS 40 for its investment properties. Now hold. See, let us say you bought a property. See the case. You bought a property on lease and you made the entry ROU debit and lease obligation credit. Now you have started giving that property on rent. You have started giving that property on rent. So now you are earning rental income from that property. Now you are earning rental income from that property. And when you are earning rental income from that property, so IS 40 is justifiable. IS 40 is justifiable on that ROU. And now in IS 40, you have two models. One is cost model and the other one is fair value model. One is cost model and the other one is fair value model. So if you are applying fair value model of IS 40, so recall it, please recall it. In IS 40 fair value model, all changes in fair value to be taken to P&L. All changes in fair value to be taken to P&L. So there will be an automatic impairment. There will be an automatic impairment. So no need to book impairment IS 36 now. This is what this guy is saying. Now, second point. Secondly, if ROU asset relates to a class of PPE, relates to a class, you know the class of asset, you know the class of asset, you remember the class of asset, like all furniture is one class of asset, all buildings are one class of asset. I'm talking about IS 16 now. If ROU asset relates to a class of PP to which the lease, for which the lessee applies the revaluation model, then the lessee can elect to apply revaluation model to all of the ROU assets that relate to that class of PPE. Now wait. Listen to me very carefully. Hope you remember this dialogue in your basic studies F3 and F7, especially in F3 and F7 of IS 16. Basic dialogue. If you apply one model to an asset, you apply the same model to complete class of asset. What does it mean? If you apply revaluation model to building X, then you have to apply the same revaluation model to all buildings. Otherwise, people will start cherry picking. Remember in the basic studies you did. Otherwise, what people will do, what accountants will do, they will pick they will pick good properties and they apply revaluation model on good properties, and they will apply cost model on bad properties. So what IS 16 says, if you apply revaluation model on one property, you have to apply revaluation model on all properties. And let me repeat it again. If you apply, my dear students, if you apply revaluation model on one asset, you have to apply that revaluation model to whole complete class of asset. Okay. So now just think, today you have taken an asset on lease. And that asset belongs to IS 16 because you have taken it for usage. And that asset falls in the class of asset on which revaluation model has already been applied. So obviously now you have to apply revaluation model on this as well. So now if you are applying revaluation model, now again you can skip impairment accounting, because they say in revaluation you have to bring it to fair value. And when you bring it to fair value, automatic impairment will be done. That's their science here. That's their argument here. So there are two exemptions. See, there are two exemptions to ROU from IS 36. There are two exemptions to ROU from IS 36. Now, I'm not saying anything. I'm giving you time to read this paragraph. Read it again. This paragraph. See, this paragraph. Just think you are doing your studies. Just think you are preparing for your exams. Read this paragraph. And look at here. I say this to many students. There are students, they message me, they say, we read article and it's very difficult. So obviously, this is a strategic paper and articles have a different advanced language. So what's the solution? You read it 2-3 times. Even I read, there are articles I've read 10 times. Yes, this is very normal. So read it more times, number one. Number two, don't expect that you will understand 100% thing. Otherwise you will become the super teacher. Otherwise you will become teacher. So don't expect you will understand 100%. Just if you are getting 60%, 70%, still this is good because you are a student. This is how give message to your mind that you are better than others. Okay, read this paragraph now. Read this paragraph, please. And see the sketch which I have made. Now the next paragraph, which is very general, and I assume everybody or all of you must know. Let me enlarge. I taught you this. Normally in this world, IS 36 says it is very, very difficult. It is very, very difficult to calculate recoverable amount of a single asset. In this world, it is very difficult to calculate recoverable amount of a single asset because normally a single asset does not generate independent cash flows. A single asset does not generate independent cash flows. So what we do, we make a smallest group of assets. Make a smallest group of assets and we calculate recoverable amount for that smallest group of assets that generates independent cash flows, and we call it cash generating unit. I'm sure you know this. Right? So this is what IS 36 is saying. One more thing. Now, normally a little technical line I'm saying, but now as you are on the last month of your exams, as you are just 1 month before your exams, so you have some knowledge. When you do impairment testing, you calculate value in use. Not only you calculate value in use, but you also calculate fair value. When you do impairment testing, not only you calculate, my dear student, respected student, value in use, but you also calculate fair value. So fair value means you will search for a buyer, that how much amount the buyer is going to pay you. How much amount the buyer is going to pay you for the running business. Okay, look at here. So IS 36 says that is the buyer going to buy your business with liabilities? Is the buyer going to buy your business with liabilities as well? If yes, if the fair value includes a liability impact as well, if the fair value includes the liability impact as well, so yes, in the carrying value, you also have to include the lease liability. In the carrying value, my beautiful students, you also have to include the lease liability, so that the comparison would also be like with like. It's not difficult. Read it. Okay. Now, one very interesting issue which I have to discuss. Interesting point. This was just a discussion to come to that point. I hope you have all remembered the onerous contract. I hope you all remember the onerous contract. I have taught this onerous contract in the class. Even we teach in F7 and FR level. We teach in SBR level. We teach in ICAEW level. All levels we teach onerous contract. Look at here. What is onerous contract? Onerous contract is a contract that is signed. And now you came to know that the future economic benefit from this contract is less, but the unavoidable cost is higher. Future economic benefit is less, but the unavoidable cost is higher. Okay, look at here. So now whenever you see, you find such onerous contracts, so IS 37 says you have to book the provision for that onerous contract. You have to book the provision for that onerous contract. Okay, and you have to make the entry P&L debit and provision credit. Now how to book the provision? You remember I taught you in the class lower off. You remember you used to pick two things. Number one, the future rentals, the future committed rentals which you have to pay, to take the present value of future committed rentals, and on the other side you write the penalty. On the other side you write the penalty, and whatever the amount which is lower you book, you going to book the provision for onerous contract. Do you guys remember onerous contract? Please write on the chat box. You remember this or not? You remember this or not? You are chartered accountants now. You are chartered accountants now. Okay. Thank you. Look at here. Now just think. In onerous contract, we are going to book the future cash flows, all the future rentals present value. Now this is what the science is. Because we have signed the agreement. Okay, but this onerous, and you remember when I was teaching this you in class, when I was teaching onerous contract to you guys in the class, I gave the example of a machine 2 years lease. That means we have taken a machine on 2 years lease, and suddenly after a month or so, government has passed the law that now this machine is useless. You can't make any product from this machine. Whatever product you are making from this machine is banned. So now that machine is useless. So remember, I told you at that time, now calculate the future rentals present value at one side, and on the other side keep the penalty amount and take the lower off. Okay, so this, please listen. So this treatment was perfect. For the lease agreement when there was no IFRS 16. This treatment was perfect for the lease agreement when there was no IFRS 16. But now what the latest IFRS 16 says, even it's a 2-year or 3-year lease. If a lease is 2-year or 3-year lease, still you book ROU debit. And lease obligation credit. If it is just a 2 years or 3-year lease, and means more than 1 year lease, still you make this entry, ROU debit and lease obligation credit. ROU debit and lease obligation credit. So now when you make this entry, what is ROU? How you calculate this entry? All future cash flows present value. When you make the entry ROU debit and lease obligation credit, that means you have calculated all future cash flows. So use your brain. You have already booked all future cash flows present value in the form of ROU and lease obligation. So now in this case, now you don't need to book any onerous contract provision. Technically now you don't need to book any onerous contract provision. Use your brain. So this is what is written here. So technically now you don't need onerous contract accounting. Okay, but yes, as just think about the story, as a new law has been passed about that machine, about the product, that now you can't sell that product. So when the government has banned the product, so obviously this machine is useless, and when the machine is useless, then this is the hint of impairment. So now you have to book impairment testing for this ROU. Now you have to book impairment testing for this ROU. Read it, please. Read it. Let's read it together. It's very interesting topic. Don't sleep. When considering onerous contract, these are governed by IS 37 provisions, contingent liabilities and contingent assets. And this IFRS standard is applied to any contract for which unavoidable cost of meeting the contract obligation exceed the economic benefit expected to be recovered under the contract. However, please the students, whatever I just told you, read it. However, it is interesting to consider whether IS 37 or IFRS 16 can coexist. See, how is it possible? We have already booked all future cash flows in the form of ROU and lease obligation. We have already booked all future cash flows present value in the form of ROU and lease obligation. So if you apply IS 37 now, you are going to do it again. You are going to book the same thing again. So it will be doubling. It will be double counting. The International Accounting Standard Board decided not to specify any particular requirement in IFRS 16 for onerous contract. The board made this decision because, listen now, this is the solution now. For leases that have already commenced, that means for leases on which you have made the entry ROU debit and lease obligation credit. For leases for which you have already made the entry ROU debit and lease obligation credit. After an entity can appropriately reflect an onerous lease contract by applying the requirement of IFRS 16. Just go with IFRS 16 because you have already booked all future cash flows. You have already booked present value of all future cash flows. A lessee will determine and recognize any impairment of right of use applying IS 36. Yes, but as we just received the bad news, the bad news itself is an impairment hint. So now we need to book impairment. For this ROU. Okay. This is point number A. What is point number A? If the lease has been commenced, lease has been started, you have already made the entry ROU debit and lease obligation credit, then you have to do this. Then you just have to book impairment. You just have to book impairment accounting. You just have to do impairment accounting. For leases, for be confident, you will understand. For leases that have not already commenced, means for leases for which you haven't booked the entry ROU debit and lease obligation credit. So now you have the room to apply IS 37 for leases which are not already commenced. Think over it. Means you have not made any entry ROU debit and lease obligation credit. So yes, now apply simple IS 37, old IS 37, the way you used to book. The requirement for onerous contract in IS 37 are sufficient. The requirement in IS 37 apply to any contract that meets the definition of onerous contract in that standard. Now you can apply IS. So now what is the summary? Let me give you the summary. Oh, please don't sleep. The topic has already ended, almost ended. Only one paragraph is left. Just one paragraph is left, please. If the lease has already commenced, if the lease has already been commenced, that means we have made the entry ROU debit and lease obligation credit. That means we have already booked all future cash flows present value. So now you cannot apply IAS 37 on, you cannot apply onerous contract accounting. You can only book impairment on ROU, because yes, the bad news has just arrived. The bad news has just arrived. Okay. Now B part. If the lease has not been commenced, that means you have not booked the entry ROU debit and lease obligation credit. So now you are free. You are free to use IAS 37 onerous contract accounting. Okay. Now, little energy is needed. Little energy is needed. Some energy is needed. What is written? The question also arises as to how to deal with the question also arises with as to how to deal with onerous contract when initially applying IFRS 16. Now I am discussing this part A. In part A, again you have two options. In part A, again you have two options. See, let us say the lease has already been commenced. The lease has already been commenced, and you have made the entry ROU debit and lease obligation credit. Okay. So now you have, standard has given you two options. The company can either first, this is first, apply IAS 36 to right of use asset. This I just told you. When, please look at here, when the lease has already been commenced, that means you have already booked ROU debit and lease obligation credit. So technically you have accounted for all future cash flows, all future cash flows. So now no need to do any IAS 37 thing, just do IAS 36. And tell me students, how we book IAS 36 impairment. Let me tell you the impairment entry. This is the impairment entry. See, impairment entry will be, let me change the color. Impairment entry will be P&L debit and that asset credit. This is for requirement number 1. P&L debit and ROU credit. This will be the impairment entry, and we all know how to calculate impairment. I'm not going to that detail. How to calculate impairment, this is a separate issue. But this is how you will make the entry for impairment. For this case, there is one more option. For this case, there is one more option, which is option number 2. Not apply IAS 36. Look at here. Not apply IAS 36 on the date of initial application, but instead rely on its assessment of whether any of its leases are onerous under IAS 37. Any onerous lease provision is derecognized and an equal amount is deducted from the carrying amount of relevant right of use asset. This line looks difficult for a student. This is a second option. Listen. Although, please look at me. Although you have made this entry, I agree. Although you have made this entry, the lease has been commenced. Still, you have one more option. What option? You ignore everything and you start accounting. You start accounting for onerous contract. And you know, in onerous contract is part of IAS 37. Onerous contract is part of IAS 37. And yes, an onerous contract is a provision, So you calculate the onerous contract provision and make this entry. See, P&L debit, make this entry, P&L debit and provision credit. First make this entry. P&L debit and provision credit. First make this entry, P&L debit and provision credit. And as a second step, see this, read this. And any lease provision, any is deducted from the carrying amount of the relevant right of use asset, and then make a second entry. Then make a second entry, provision debit and ROU credit. Cancel it with ROU. Cancel it with ROU. So what technically you are doing in point number 2? What technically you are doing in point number 2? See this. Let me do. you are ultimately canceling this provision. Just think, in the first entry, you credit the provision, and the second entry, you debit the provision. In the first entry, you credit the provision. In the second entry, you debit the provision. So automatically P&L debit and ROU credit, the same thing you will find. See, ultimately P&L debit and ROU credit will be left. You are not getting. See, this in the second treatment, you are doing two entries. You are making two entries. In the second treatment, you are making two entries. First, P&L debit provision credit, and then whatever provision you have created, you are going to cancel it in front of ROU. So technically, provision credit and provision debit will set off. Provision credit and provision debit will set off, and the remaining entry, P&L debit and ROU, will be left. This is a choice. This is a choice given by standard, and see, it is written. The choice can also be applied on lease by lease basis. The choice can also be applied on lease by lease basis. The choice can also be applied on lease by lease basis. This is a choice. I know it is little bit difficult, but again, you guys are big guys. You are big boys. So big boys should lift heavy weights. Big boys should lift heavy weights. Okay. And you know, I recommend a student to do these articles. Do these articles yourself. It is your duty. You have taken all the classes, revision days. Now at least you can read the articles. And if you know, if you read, you will get some material in your mind to write. If you read, you will get some material in your mind to write. Just think, you know, I also make vlogs. Nowadays I sometimes make one vlog per day. But how can I make the vlog? I have to read 3 to 4 hours daily. 3 to 4 hours I have to sit in a separate room. In that room, my kids are not allowed. No family members are allowed. So when you read, you speak. You read, you write. Obviously. So the solution is reading. Okay. Even I have taught you this article. This is not enough for you. Even I have taught you this article. You need to, some student need to see the recording again. Some student need to read this article again. This is how we do. This is how we do. This is how repetition is done. This is how the repetition. Even you have seen in my teaching style, I repeat. In my revision days, I repeat. Although I repeat in normal class, I also repeat in revision days. See, repetition is how is important. Read this line as well. Read this line. See, exam tip. There is an exam tip. See that there is an exam tip by the examiner. Yes, I'll give you the recording. Don't worry. I'll send you. Don't worry. It will be available on YouTube as well. Did you read it? Did you read these points, my dear respected students? Now, students, almost to, as per my knowledge, I have sent some questions to almost all my list. At least save my number. Those who are my registered students, save my numbers. Save my number. Otherwise, you won't get my messages. Okay, because I send messages through a broadcast list. First thing. Number two, I have sent some questions for practice, for which the question which you will send me for marking, and this is the season of marking. This last month is the season of marking. Get your things checked by your teacher. Okay, right? So please avail that facility. Don't miss it. Still you have time. Still you have time, otherwise you will regret. You will regret. Still you have, still you can, you all can clear. Still you all can clear by working hard and staying with positive people. The second point is very important. I think much more important than first point. If you stay with negative people, those who spread negativity that you can't do it, it's a very difficult paper, people fail, you are wasting your time. Then it's better you don't work even hard. Okay, so both things are equally important, right? So it's time to say goodbye. We'll keep one more revision day, inshallah, soon, and I'll give you the most probably next Sunday. Next Sunday we'll meet again. Okay, and I have recorded almost all latest past papers. All latest past paper. Only one question is left. That is question number 3. That is question number 3 of March June 2022 attempt. All the other past papers have already been recorded. Thank you. Take your time. Thank you.